Tuesday, September 12th, 2017. Monaco 64 here. So early market update, and also I'm going to talk about the case for gold, especially with what's going on with the price of gold right now. A lot of people are probably concerned and worried, but I think it's, of course, it's just some noise and short-term move. So it's 7 a.m. London. So let's have a look here. At spot gold is 1325.50, down $2. The range has been 1323 to 1329.60. If you remember well, when gold broke out through 1300 a few weeks ago, we went up to like 1326, and that was like a short-term top, and then we came back down. So I think this is an important level here. The other one positive that I'm seeing for precious metals in general is that silver has held up relatively well compared to gold. We're at 1775. The range has been 1771 to 1785. Yesterday, silver kind of outperformed gold. Silver was trading trying to get back above 1790 most of the day. It did weaken at the end of the day after the regular COMEX close. Of course, they bashed gold a little further down, and silver. The Dow right now, after a big move yesterday, is up another 20 points, 22,071. S&P futures up 3/4 of a point, basically unchanged, 2488. Currency-wise, we're seeing the pound a little stronger, 131.77, up only 14 pips. Euro virtually unchanged, 119.60. And the dollar yen as well, unchanged, 109.38. So not much movement in the currencies, nor the stock market. Gold and silver still a little bit under pressure. I talked about the Fed yesterday. The Fed meeting isn't this week. It's next week on the 20th, on Wednesday. That's when they make the decision. I don't expect them to do anything in that meeting. They have, of course, raised rates 3 times in the last few months. They started December 2016. They hiked in March this year, and then they hiked also in June this year. And yeah, it looks like they're not going to hike in September. And some people expect they might do something in September, but now with the Federal, Reserve Board, with only 3 voting members and 4 vacant seats, there's a lot of uncertainty, and there's also Yellen, who's going to be her term's ending in the end of January next year. So, as Jim Rickards put it in one of his emails that I got, an article he wrote, Donald Trump could own the Fed. He could be the first president since Woodrow Wilson, who unfortunately allowed the Federal Reserve Act to go through or signed it into law. He could be the first president since then to pick whoever he wants, really. Of course, it's going to go through an approval process in Congress or in the Senate. But yeah, so what happened yesterday? I think some people have been saying, market was relieved that the hurricanes weren't as bad as they were meant to be. But I don't know. I just think people in the markets, especially mainstream, people tend to use a lot of excuses for market moves. Sometimes markets move just because they move. And that's it. So what about this morning? What kind of headlines have we got? Well, in terms of the dollar, there's an article here of how this is the worst year since the Plaza Accord. That was back in 1985 when the dollar came off a lot. What else? Oh, another one is how the Bank of Japan now owns 75% of Japanese ETFs. So that's pretty interesting there. I read an article on Zero Hedge by someone called the the economics dude or something, saying how the U.S. government should learn from the Japanese government, because the Japanese economy is doing well. I thought that was kind of a joke article, but it was actually serious. But anyway, now with the case for gold, I'm going to look at another one of my little books that I've got here. This one is called A Pocketbook of Gold, a survival manual for monetary mayhem by James E. Sinclair and Peter D. Carlin. So that's the book there. Not sure where you can find it. I bought it through Jim Sinclair's blog in around 2010. That's when it came out. And I'm going to take one of the snippets from this book. So A Pocketbook of Gold, and on my case for gold. Yeah, I'm going to look at chapter 1 here, and it says, Why Own Gold? And it starts with a quote from Ludwig von Mises. And it says, there's no means of avoiding a final collapse of a boom brought about by credit expansion. Does that sound familiar? The alternative is only whether the crisis should come sooner as a result of a voluntary abandonment of further credit expansion, or later as a final and total catastrophe of the currency system involved. So, Ludwig von Mises. So, and now, it says in the book here, gold is insurance. And it goes on to say, the primary reason to own gold is that it maintains value, especially during times of political, economic, and currency-related crisis. So you see, gold is not insurance against hurricanes or natural disasters. It's insurance against political, economic, and currency-related crisis. It's against human nature crisis, against human constructs, because that's what money is, a human construct. In short, it operates as insurance. That includes, but is not limited to, insurance against political uncertainty and economic disorder, as well as insurance against the whims of central banks and their tendency towards money printing. Wow, that's interesting. So that's gold as insurance. Another one for some people who say that being your own central bank is something that's come out of the cryptocurrencies, but this book was written in 2009. It says, gold allows you to be your own central bank. And what does that mean exactly? Although a central bank is supposed to maintain the value and purchasing power of a currency, it has both the ability and the tendency to depreciate the wealth of citizens through excess money printing. Interestingly, while they issue paper money, they also maintain gold as a currency reserve. That alone should tell you something. Central banks do not depend entirely on their own paper currency to maintain wealth. They use gold. Why? One reason is because gold offsets currency risk. Through the retention of gold, an individual mimics the function of a central bank and therefore negates the detrimental effects of a central bank running its monetary printing presses. It is why they own it. And they don't want you to. The controller of a nation's money supply can dictate the distribution of wealth and power within the nation. And it goes on to say, as the banker Meyer Amschel Rothschild once said, give me control of a nation's money supply and I care not who makes its law. Gold mitigates the power surrendered by holding a fiat currency. Gold is power. So that's what people need to remember. Gold might make you wealthy if we see a big move up and really monetary mayhem, but it's mostly insurance to maintain the wealth that you've already accumulated. If possible, not everyone can do it, of course, or you can use silver as well. So that's why, when you see these moves like we've seen the last couple of days, you need to think, this is what it's all about, the physical part. The trading, of course, you can try to do it, the trading. That's a different game. Mining shares, mining stocks, yeah, that's also a trading. That's like leveraging yourself, to gold, because when gold starts moving higher, the mining companies should do even better. So yeah, you should have a divide, you know, like a whatever you want. You know, I'm not here to give advice. This is just my personal information. You should have whatever you want in physical gold. If you want, have some mining shares, mining stocks, or trade, or don't, or just have the coins. So here's some 1964 quarters as well. That's the last year that the U.S. coinage was 90% silver. After that, it went to 50%, and then they just dropped it off. I think in 1971, there's no silver left. So that's it. If you enjoyed this video, please like, share it, and also subscribe to my channel if you haven't yet. And you can follow me on steemit.com, on Twitter, and thanks for watching and all the support. And I'll talk to you later. Bye.